supply with gold has been much better than the supply with silver. When I look at the last 2 years, 95% of all of our sales, which are record, have silver in them or are exclusively silver. And as a result, gold has not been as difficult to come by. But we can look at the beginning of this year as an example, 2021. In January, the U.S. Mint started rationing and allocating gold eagles and gold buffaloes. And normally that happens in November, December, not 2 weeks into the new year. Gold is not immune to this supply chain issue. The U.S. Mint is the model of inefficiency. I'm one of 27 U.S. Mint authorized resellers, but all year long there has been nothing but delays and shortages. And in April, when they started to transition from type 1 to type 2 on the Eagles, they were shut down for more or less 4 months. Now, they didn't actually close the building and turn off the lights, but nothing came out for literally 4 months. And if you go back to March of 2020, when the Eagles literally exploded in premium, they really haven't come down in the better part of almost 2 years. And the question is this a new reality? Is this a new, what we can expect moving forward in terms of premiums? And as I mentioned, we now have 2 full-time employees that are doing nothing other than securing product and securing inventory, which used to be a phone call and bang, it's in your warehouse. Now it's 90 to 120 days in advance. You are purchasing, paying 100%, paying the premium, the highest premium we've ever paid in 30 years, not able to hedge that premium, and then running logistics for 90 to 120 days, hedging, tracking, staying on top of shipping, and watching it all the way through the system, and then deciding when it's okay to actually sell that product, knowing that we don't have it yet, telling the client we expect it in 2 weeks, but then oftentimes running into supply chain disruptions. Precious metals, to me, are wealth that have lived through 2 world wars and German hyperinflation and the Great Depression and every pandemic, and they'll live through this too. And this is why I think for the last several years you're seeing massive money accumulating gold, whether it be the central banks, the commercial banks, and now the heads are the sovereign wealth funds and the family offices. There's one trader right now on COMEX, one, who's long 40,000 December gold contracts. Now, this is the same group of people, in my opinion, this group that the COMEX Commitment of Traders report titles the others. They're not the hedge fund speculators, and they're not the commercial banks. They're private managed money. With anonymity, we believe them to be sovereign wealth funds or family offices. One trader has amassed 40,000 December contracts. They've been standing for delivery for the last year, and I believe this will also post for delivery in just a few weeks. That's 4 million ounces of gold. That's $7.5 billion in gold with an initial margin deposit of over $350 million. Who's got that kind of money? The biggest money in the world is standing for delivery. The biggest money in the world is accumulating gold when the rest of us are asleep at the switch. That's what's really different this time, is an awakening. You could talk about, what I believe is the biggest issue, and I think people will run to gold when this happens, and that is the announcement, I think it was September 1st or 2nd, the day after the United States left Afghanistan very unharmoniously, that Saudi Arabia has struck a military relationship with Russia. Now, it is our protection of the Saudi kingdom since 1974 that has given us the petro reserve status. And if all of a sudden Russia is now protecting Saudi Arabia and Nigeria with military cooperation, the 2 biggest OPEC producing countries in the world, what does that say for the future of the dollar hegemony, where oil is only sold globally in dollars because of our protection of the Saudi kingdom? And if you strip that away, what you see is a massive dumping of dollars, where the world who has to own dollars to buy oil starts to choose other things, maybe their own currency or a currency closer to home, or just a currency that's not the dollar. And all of a sudden, the best efforts of the Federal Reserve to monetize the debt market, keep interest rates low, goes out the window. You see interest rates spike. You see assets collapse, because all 3 pillars of wealth, stocks, bonds, and real estate, for the first time, are not only both all positively correlated to one another, inversely correlated to interest rates. And as interest rates rise, it is a religious experience, I think, for the wealth in this country who would watch the valuations of their assets shrink quickly, evaporate. And I think this is part of the reason you're seeing, and I use the word sophisticated only as it pertains to information, and I think the sophisticated money is seeing this, and they are exiting stage left quietly in anticipation of this type of stuff playing out. There's so much money out there that's been created. I mean, the money supply has increased almost 30% year over year. But again, let me just say what I said and let this sink in. 50% of every dollar ever created in the history of the world, of this country rather, United States, has been done so in under the last 2 years. So there's so much money out there that has found its way into equity prices and real estate prices. As Ludwig von Mises, the father of Austrian economics, would call it, the crack-up boom, where price distortion and misallocation of capital creates an environment where price discovery is next to impossible. And that's what's happened with all this easy money. It's just blown things up to levels that are not justified by the underlying economy. And that's really the issue. And all of that money, all of that wealth that has been created, will look for a refuge, will look for a safe place to go. And I think that's what's happening. And it's this K-shape where the people who don't have assets are struggling to make ends meet as food and energy and housing. Oh, wait, those are the three things that aren't included in the government's measurement of inflation, the CPI. But those are the three most inflated asset classes. The things that we need to live every day are getting more and more and more and more expensive. But if you're wealthy and have assets, your assets have gone parabolic. You don't care. You're making so much money hand over fist. Yeah, you notice it, but it doesn't bother you as much. You're just trying to figure out how you can keep all of those profits when most of the country is figuring out how they can keep food on the table, keep their lights on, and keep enough gasoline in their car to get to and from work. I think these are challenging times, and I really believe will only get more challenging, not only by the policies that seem to be quickly raining down upon us, but also we are very late in the stages, I think, of the dollar Keynesian economic experiment. And I think if you have all of your assets in dollars at this stage of the game, you are destined to go broke when this plays out. And I think that is what is spurring this widening into the mainstream. This is a different environment where people have made more money than they ever would have dreamed over the past 2 years, and it just doesn't seem right. And I think that's what's triggering it.